let's get started with our indecision candle setups. Now, I always recommend to all traders to start out with their own strategy. Now, that doesn't mean you can ignore what everybody else is offering out there, or other strategies or other setups. But I advise everybody to find one that you like and then recreate it and test it so you understand it, so you're the master. Like, I'm going to show you a strategy today, but you're not going to be able to suck all that knowledge out of my head. I'm not going to be able to give you all the little innuendos. So I'm going to give you a starting point that you can then test a strategy using demo account, fit it into your type of trading, and make it yours. So I always encourage traders to develop their own trading strategy, time permitting. Now, there's several reasons why I believe it's important to develop your own strategies. First, creating strategy requires the traders develop a greater knowledge of the market and its price movement. It also requires you to think. So you're not just a doer or a follower. You're a thinker. You understand and you interrelate with the market. Secondly, when one develops their own strategy, they are tuned into how that strategy actually works, what it will cause, what causes it not to work, and they will be in a much better place to make adjustments or when you understand when you're getting false signals. Now, this can be the time-consuming part because everybody wants instant trading. Everybody wants to click on a button, open up a platform, put some money on it, and start trading. Well, I find building my strategies, testing them out, working on a demo account, and finding them are all rewarding features. Okay. The ultimate goal is to make profit. But just like a professional football player, you practice all week, you learn all week, you do scrimmages all week. The end goal is your team won, or your team made it to Super Bowl. But lots of teams don't make it to Super Bowl. But the player could have had a rewarding experience because he enjoyed everything getting to where he's going. So in short, you want to analyze your charts looking for opportunities. That's what I do. I look and say, oh, look at that. I could have made a lot of money there if I would have realized there was a trading opportunity. Why didn't I see this trading opportunity? What could I have done to be alerted to this trading opportunity? And what type of strategy could have alerted me and allowed me to take advantage of it? So not all trading advice is good advice. Figure out where the advice has come from. That's why you don't have to start from scratch. You can take the strategy I'm going to work with you today and take it on from there, instead of being Barry's input, Barry's indecision candle setup strategy. It can be Billy Bob's strategy because you made it your own. And you want to just test and modify. You don't need to reinvent the wheel. Now remember, not one strategy for everything. You have to decide what you want your strategy to accomplish. Do you want trading signals? Do you want it to give you entry points, exit points? Okay. Do you want to alert you when the trend is ending, when a trend is starting? So you have to understand what you want out of your strategy. Now, I trade from chart patterns. I trade from support and resistance. I virtually use no technical indicators. I'll have a moving average on my screen. Okay. I use candlesticks, but I don't use candlestick patterns. So to me, the first thing every trader should be looking at is support and resistance. Now, this class isn't about learning about how and when to draw your support and resistance lines on your charts. But remember, support and resistance are like the floors above and below your feet and your head on an elevator. When the elevator is moving up, you have to break through that ceiling to move up. And when the elevator is coming down, you have to break through the floor. Okay. Where that elevator stops quite often, and the time of day it stops at those stops quite often, become your support and resistance levels or your price levels. Now, the only thing I place on my charts is support and resistance. I use these support and resistance areas in conjunction with candlestick analysis to trade. Support and resistance areas show you where to buy and sell. They are a vital part of every trader's toolkit, and it is essential to learn how to place them. Placing support and resistance areas is the most important skill you can master in trading, and placing it is pretty easy. Support and resistance areas divide your charts into buy and sell areas. An area that sits above the current price is a sell area. An area that sits below the current price is a buy area. So let me pop up some live charts here for you. Okay, so we are looking at, I don't want to look at this. We'll come back to this one in a second. But here we are looking at the euro US dollar. Okay, it's a live chart, but this is Sunday. And here we're looking at the same euro US dollar. And this is a half-hour chart. And this is a 1 hour chart. All those gold and blue lines are levels of support and resistance. These are levels where when price was moving in this range before, these levels were strategically important in that journey of price. We can even see in the short term where these same levels have held in the assets movement it has been trading in its journey. Okay. Just going back farther in history, look how important this gold level is. Look how important this gold level was. And once you have these on your charts, you never have to draw them again. They move forward with you into the future. And every time the asset moves into this price range again, the levels you had drawn on there will come onto your charts. Now, support and resistance levels are not finite numbers. They are zones or areas. And as you can see above here, see the two blue lines? Now, I color code my support and resistance lines, and let's call them just price level lines, based on how long ago I put them on the chart and how important, because you can have very important levels and you can have secondary important levels. And my color key is my color key. Yours can be your color key. Now, actually, let's see if I'll show you one with lots of them. So as I slide back and back, you can see all these lines coming on the charts. These are from when the euro was trading lower at the 118 level. Now it's recovered and moved up to the 119, close to 120 level, where it hasn't been in a while. Now, the euro's had a major time breaking through this gold level here at 119.48. Every time it's gotten near 120, it's bounced off and come back down. So now it's at 119.6. Now, as you see, these levels are the same, whether you're looking at a half-hour chart, whether you're looking at a 1 hour chart, whether you're looking at a 15-minute chart, they're all the same levels because it doesn't change. Now, we have this level on our chart. So this would be a potential sell area. And the reason I have the two lines in blue is because I give my support areas resistance levels about 10 points width, because they're not finite. If you go back in history, you'll see sometimes there was a top here, sometimes it was a close here. The number itself was important, but it's not a definitive number. So we have this zone, which I could fill it in like that. No matter whenever you're using support and resistance, a lot of people say the resistance levels are 113.97.4, and every trader wants to set their stop loss or to take profit or do something at 119.734, but it really isn't. Especially when you're doing historical levels and what I call eyeballing, looking at charts to get these numbers on. But in this case, we have our next level above price. And for our indecision strategy, this is a very important level. only because the euro has made it up to that price. These lines have been drawn on the chart a long time ago. They weren't drawn on there for tonight's class 15 minutes ago. They've been on the chart a very, very long time. It happens to be we have a classic move right here. So once we've got our support and resistance levels on our charts, we're not doing anything with them yet. We're just having them on our charts, and they should always be on your charts. So good traders don't randomly place entry orders and hope that they get lucky. They place their entry orders at significant price levels. Significant price levels come in many forms. Support and resistance is one of these many forms that we would look at. Why? This happens all the time in every Forex pair, in every financial market for that matter. And this is how markets work. Buy and sell orders are grouped together in the same general area. And when they are hit, we see the impact on price. There are a lot of indicators out there that claim to give you great support and resistance areas. I have tried them all, and I do not find them reliable. I don't find anything more reliable than eyeballing, looking at your charts. Support and resistance placement still needs to be done by a person. These are my support and resistance areas, and if you want to trade more pairs, you'll need to place them yourself. A good Forex trading strategy requires some work. But don't worry, it's easy. All you are doing is placing horizontal lines when you spot an area with 2 or more bounces by going back and looking at your charts. And you can even do that by scrolling your charts back or changing from 15-minute to 1 hour to 3 hour to 4 hour, because all these numbers will work. All the numbers are the same important numbers on all the charts. So there's 3 rules about support and resistance. The 3 key rules you need to keep in mind when placing support and resistance on your charts. Place areas on the body of a candle. The body is more important than the wicks. The more recent the bounces are, the more important. Prioritize recent bounces over old bounces. And you need at least 2 connecting bounces to place a support or resistance area. So now you have them on your charts. Now we need to move over to the second part of what you need to understand, and that's candlestick analysis. Now, most new traders learn a little bit about candlestick analysis, but most of what they learn, most of all the mind-boggling stuff out there, is useless. Why? Well, the standard approach to candlestick analysis is basic pattern recognition, which fails to work in real trading and especially for short-term trading. They tell you to memorize all of these patterns, whether you have 3 white soldiers, 3 black crows, whether you have evening stars, morning stars, whether you have dojis, hammurabis, marabuzu, double tops, triple tops, all of these things you got to memorize. And then when you see them happen on your chart, this is the way you're supposed to react. Well, that's a crock. Now, the fact is you can't skip straight to advanced candlestick knowledge without knowing some basics. If you don't know the basics, then fine, I got you covered a little bit. When Forex traders first start out, they usually learn about candlesticks. But like I said, what they usually learn is useless. They normally see a list of candlestick patterns. Each pattern has a set in stone definition that is only meaning that it can have. So the truth is, we see on your hammers, inverted hammers, dojis, bullish spinning tops, bearish spinning tops, hanging man, gravestones. Okay. But this is not candlestick analysis. It's pattern recognition. And for a price action trader, it's useless. Actually, it's worse than useless. Thinking about candlesticks as just a pattern is counterproductive. It makes you a worse trader. It leads you to make massive mistakes. Why? Giving a pattern a set definition leads to tunnel vision. When you see a specific pattern, you assume that something will happen. But that's not really how candlesticks work. All candlesticks need to be assessed based on the candles around them and many other factors. So the truth about candlesticks, normally people say a spinning top means a reversal is imminent, which can be true. However, the same pattern can also mean a continuation is imminent. It can mean that price is temporarily stalled. It can mean a lot of things. So thinking about candles as a simple pattern is a wrong way to do things. We need to look at candles and be able to tell the story of price. And the only story of price we're concerned with right now is the story around where price currently is and the resistance above his head and the support below its feet. Now, every single candle on your chart is telling you a story. So the foundation for my Forex trading strategy is reading and understanding the story of price. The reading and understanding the story of price is vital. It's vital because it allows you to answer one of the most important questions in trading. Who is in control of price? This question has three possible answers: buyers, sellers, or neither. Being able to accurately answer this question is vital. And if you're about to enter a short trade, you need to ask yourself, who's in control? If your answer is the buyers, then why are you going to make a short trade? So let's start breaking down the story of price. But we're only concerned about the story of price, again, in our short little theme that we're looking at for our price setup. So for instance, like here, we see this little candlestick chart, and we see three candles in a row, red candles. Now it could have four candles, it could have two small little green candles in here and four red candles, but we can see who's in control of the markets right here. We know the bears are in control. The candles all closed lower than they opened. They all created new lows beyond the previous candle's low, and they all had small wicks in comparison to the candle body. The small upper wicks indicate that buyers were unable to push up much through price. So, small upper wick. Nice sized body, and each body closed lower than the previous candle. This is something we are looking for on our chart. If you don't see this on your chart, like I said, it could be 5 candles, it could be 7 candles, it could be 4 red candles, one green candle, and 3 more red candles. You can look, and we're not defining it as a downtrend. We're defining that the bears are in control because this is only a short-term area. We're not putting a trend line on here. We're doing nothing. We're using our eyes and looking at the price movement on the chart. But so, because what we want is, when we see price moving down, the bears were controlling the market and pushing price down. All of a sudden, we get a little body candle. This is called an indecision candle. This little candle is vitally important in our story of price. So, but what does that highlighted candle tell us? It has a short upper wick, a small body, a long lower wick. And this is what we call an indecision candle. Now remember, we're not making any trading decision. We haven't talked about going long, going short, buying, entering, exiting the market, putting in stuff. We're just looking at what price is telling us on our charts. So we have our support and resistance on our charts. We have the story of price moving between those support and resistance levels. And then the indecision candle occurs, when neither buyers or sellers can gain and maintain control of price. Now, the fact is, any day we get a zillion indecision candles. Okay? We get lots of odd and end price movement that have small bodies. But we're not concerned with them. We need to define what we're looking at. Okay. What we need is our indecision candle to form after a bullish or a bearish move, and to form exactly on that support or resistance zone. It's the only thing that matters to us. These three things must happen. So here we can see when these three things come into alignment is the only time this particular strategy, you can have lots of other strategies, okay? But this particular strategy, when you see this happening, is starting to come into play. So you have 1, 2 events, 3 events. Now, having all 3 of these events happen at the same time isn't so often, although it does. But when these 3 pieces of information, or these 3 events happen, we then have a setup. So when price hits resistance, we get an indecision candle forming. So let's break down this candle and the story of price and why we get this indecision. Now, indecision candles have to have a large upper wick. Now, everything is reversed depending whether you're coming off a downtrend or an uptrend. A large upper wick shows that the buyers tried to continue the bullish trend but failed. Sellers took control of price and pushed it down. It needs to have a small bearish body. The small bearish body shows that sellers were able to close lower than the open. And this is significant because in the 3 candles, the 4 candles, the 5 previous candles, it consistently closed higher than the open or in reverse lower than the close. And this showed us that the buyers were losing power. So what we have, buyers in control, buyers pushing, pushing, pushing up. And again, it could be 5 candles, 7 candles, 9 candles. It could have been a red candle in the middle. You see who's in control of the market. All of a sudden, when you hit this support and resistance zone, you get an indecision candle. Okay. What it means? You're getting a trade set up. So now this is a live chart. What happened? Bullish trend. Indecision candle right in our support zone. That's the exact setup we're looking for. Okay. Move up, multiple candles, indecision. But as you see, there's lots of indecision candles throughout this chart's movement. Here, 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 here. But they don't help us with anything. It's only when they form after a strong move and then the indecision forms on the support or the resistance level or the zone. Okay, here's the same asset in a 30-minute chart. The golds are that level. Here we have the beautiful indecision candle. And you can see we had a trail, but we knew the bulls were in control. So once we get the indecision candle, we can remember. So if you remember, we talked about resistance being a sell area, support being a buy area. So imagine what happens. We have 3 bullish candles headed into resistance, and then bam, price stops dead in that resistance area. That tells us that resistance area is working. Price stalls and we get indecision forming on top of that area. This tells us the sell area is working. When price pushed into that area, sell orders triggered, and buyers could no longer continue up. So this is the story of price on this chart. And this story gives us a nice little price action setup. Price action allows you to take many different types of trades: reversal setups, continuation setups, range, swing, breakouts, and scalp trades, to name a few. Okay. This one is our indecision setup, indecision support and resistance setup for a reversal trade. So what we're getting is a reversal setup. Reversals occur quite often, but if you don't know what you're looking for, you cannot trade them. Reversals are one of the strongest price action setups and one of the earliest to trade and the easiest to trade. And because they occur so often, you can trade this setup exclusively and be a profitable trader. In fact, for years, my Forex trading strategies focused on reversals only. However, these days, I trade more price action setups, but I'm a price action trader. Now, reversals come in three parts: the preceding trend, the indecision candle, and then the reversal trend. So we looked at the preceding trend. A preceding trend is a strong move by the bulls or bears heading into an area of support or resistance. Again, we use the three candles as an example, but it doesn't have to be three, and it could have a green candle. It is the preceding trend is a strong move by the bears or the bulls heading towards that particular level. The preceding trend is a very strong bearish move, indicating that there are lots of bears in the market, or the reverse. If bulls were strong, then price would not be trending down. The preceding trend shows us the bears have strong control of the market. Then we get the indecision candle, in this case, a bullish move, and we get the indecision candle right on the resistance. A reversal setup will have one of the three indecision candles. The indecision will have one of the three indecision candles. The indecision candles need to form on or near the level of support or resistance. If indecision does not form on or near the area of support or resistance, it's not a valid reversal setup. So an indecision candle in a bullish preceding trend indicates that the buyers are possibly losing control and sellers may be gaining control. In a bearish preceding trend, it indicates the sellers are losing control and possibly the buyers are gaining control, but it doesn't guarantee anything. However, an indecision candle does not indicate the price will reverse with any degree of certainty. It's not like I'm saying, if you see this happen, 75% of the time you're going to get a reversal trade. Nope. An indecision candle only means one thing: indecision. And you cannot trade solely on indecision. The image here shows indecision forming between support and resistance. See all those indecision candles? What about when a bullish preceding trend heads into resistance or a bearish trend into support? Well, then we have the makings of high probability reversal setups. But we cannot just enter yet. We need confirmation, which comes in three parts of the reversal setup. So we've got our support and resistance, we've got our strong trend, we've got our indecision candle forming on our support or resistance level. And the reversal trend is the third and the most important part of the setup. This is where we make our potential profit. After a preceding trend stalls at support and indecision forms, you often see a reversal trend. And you can actually see it in the background here. So in this case, we saw a transition of power from the bullish preceding trend to the bearish preceding trend, separated by a stall on resistance. So where do we enter a trade? Well, remember, all we can get is trading alerts. There's no guarantee a trade is going to be successful. And more often than not, you won't have a losing trade. So what you want to do is, number one, is manage your risk management. You also want to set it up so that you take the maximum amount of profit when it does move in your favor. So you know that you need to enter after the indecision, but before the reversal trend. Because if you just don't believe that it's going to reverse, you're going to enter the market too late and you won't make enough profit to offset when you have losing trades. Okay. So if you believe when these three pieces of information fall together, you can now place a reversal trade. Okay. But do you care? If you risk $100 or $200 or $1,000, you set your stop loss right on the other side of that support or resistance area, and it does move against you, you get stopped out. You lose a couple of dollars, but the next three times you get it, you make profit. So it offsets each other. Okay. But you need to make enough profit. My trading strategy was built on reversal trading. It has now expanded beyond just reversals, but reversal trading is where it all started. Entering trades does not need to be difficult. Remember, my goal is to keep everything simple. So getting in at the right time. So you have the preceding trend, the indecision candle, and the reversal trend. You need to enter the reversal trade after part 2, after the indecision candle has closed, but before part 3 completely takes off. Obviously, you enter after the reversal trend takes off. It's often too late because when it bounces off of that and goes right down, you end up getting in too late. You also need to make sure you do not enter too early, as you could be entering a false setup. So, you have to remember, failed trades happen. There's nothing you can do about them, but getting in at the right time lowers your percentage of failed trades. Many people wait for a candle close to get in, but I have tested this thoroughly, and waiting for the closes gets you in too late. So I enter after this candle has closed and this candle has formed with my entry point at this level. So if price continues to fall, my trade never gets executed. If it goes up, then I'm in the money. If it pops up a little bit and comes down and my trade has been executed, my stop loss pays off and I get out with a small loss. This means you miss out on a lot of potential profit, which is obviously not good. The key to reversal trading, or trading any trade for that matter, is getting in at the right time. So how do you do that? How do you enter a reversal trade? I have tested countless entry methods in the last 15 years. In that time, I have found 3 awesome entry strategies: entering on the new high or the new low, retrace entry, or distance entries. Okay, I enter at after this indecision candle has formed and closed. Okay, I take the swing low as my entry point. Okay, because I'm waiting for the price to come down this way. Let me clean this up a little bit for you. I use this as my entry point. I put my stop loss slightly above the swing high. So when this next candle forms, we're hoping it goes this way. So at this point, my trade will get executed and I can make the profit down. If it doesn't and it continues to move up, guess what? This trade was never executed. If it happens to come down, get executed, go back up, I get off at my stop loss. I get out with a small loss. But if I get in here and price falls down, I make a sizable amount of profit. We set our entry a few pips below the low of the indecision candle and our stop loss a few pips above the highest point of the candle. In trading, highs and lows are very important. If a new low is created from resistance, it indicates sellers are taking control of price, which means we want to be short. Just the reverse happens here. We're coming off of a downtrend. We have the indecision candle. We put our stop loss slightly below the swing low, our entry point above the swing high, and wait for the next candle to do something. And where do we set our targets? Well, we set our target at the next resistance or support level, depending on which way we're going. And we have to make sure at this point, based on where we would set our entry point, where we put our stop loss, and where we would set our target, that we can handle this with our risk management and risk reward ratios. If we can't, then we shouldn't be executing the trade. So if there's a major barrier like the next support and resistance area in the way of my minimum trade, my minimum target, I skip the trade. I always start out with my trend line, then my support and resistance levels, then I look at price action, and finally, I always look at volume to confirm. Volume is your final kicker as to whether you want to execute the trade. If volume isn't increasing and supporting your decision, then forget your trade. But this entire strategy can be your entire trading strategy. Believe me, in a day, you'll find more than enough opportunities following these. In trading, a lot of people tend to overcomplicate simple concepts. Sure, some of the concepts of trading are not the kind of thing you might intuitively know, but many things are easy. You just have to know what to look for. So if you want to learn more about our support and resistance, our trend lines, our indecision candles, our price action, go to the Education Center on Elvexo at www.elvexo.com. Now remember, you can turn this trade strategy into your own trade strategy. It can be Thor's trading strategy, Thomas's, it can be Vincent's, any of your own trading strategy. Start out with the points that I gave you and then define them to fit your trading style or maybe some other things you do. Make it your own. Okay. Make it Sherman's trading strategy. Make it Stephen's trading strategy. Make it Billy Bob's trading strategy. Okay. Based on this indecision trading strategy. But this gives you points to start becoming a knowledgeable participant in the markets. So thank you very much for joining us. Thank you for supporting Elvexo. And again, if you have any questions, go to www.elvexo.com, click on their Education Center, and I'm sure you can find all the answers, or use the live chat button. Somebody would be glad to help you out. So once again, thank you very much for joining us, and enjoy your Sunday. Bye now.